Can you guys still hear me? Just let me know. Yeah, you guys should be good. All right, cool. Yeah, all right. So yeah. Introduction to the challenge. We just did that, right? We'll trade for 5 days. We'll go over the skills to trade, the mindset, and the knowledge behind it. You start as a beginner, intermediate, or advanced trader. You get the information that can transform you into a professional full-time trader eventually, right? You might not, get a job at Goldman Sachs in 5 days, but you will have the basics that I will be comfortable with you trading, right? As an example, when we started the Discord, one of the first members in there was Bandy, and the trades that he did, Jesus Christ, it was a miracle that he was still alive after that. Just going into trade with 90x leverage and basically playing Russian roulette with his money. And fast forward like 3 live calls or 4 live calls, and he's out there doing setups and trades that are on the level of professional traders, literally. So that's very good. That's very good progress, and I think it's a testament to how we can how much potential there is in every one of you guys that are just interested and ambitious enough to take the knowledge and work with it, right? Because like most of the trades, I give out signals, but most of the trades that you guys were trading were your trades, right? Which is just amazing. So right, so what will you have after those 5 days? You'll have a clear trading plan. You'll have a way to be accountable, and you will have clear accountability in your trades and your progress, and we'll have clear trade breakdowns where we analyze every single trade, every single situation to the core, so we understand what's going on. Once you understand what's going on in the core of a trade, it will the effect of it or what you need to do is self-explanatory. So rather than me go into a situation and say long here, short here, which sounds great at the beginning, but even if you just did that, you would most likely mess up the trade. I'm talking from experience here. Like on paper, my trades, my signals would look amazing because I traded it, but you copy trading those signals, they can only be worse than my actual trades, right? So I don't see that as an actual value proposition in being like, okay, well, because you don't learn how to trade, you just learn how to copy trade. And if you get into a situation with your account that is not covered or that is not talked about, if it was just signals, that would be a case, then you would lose your money. So I guarantee you, every group out there that just posts signals, like even if those signals were profitable, 90% of the people that are trading those signals are still losing money because their setup is wrong, their risk to reward is wrong, and all those things are not are not covered. So rather than just having signals, I want to give you the knowledge, the core principles, what it's based on, and if that is clear and understood, then the trades themselves become muscle memory, and you can even find the trades yourself, right? Like you don't want to be dependent on you don't want your income to be dependent on if I feel like posting a trade today, right? And I know that it's not. What you want is you want to be able to understand the trade yourself, obviously, right? So that's what we're going to do. We'll go through a trading plan, we'll go through the accountability, and we'll break down every single trade, where afterwards You can be like, oh, okay, I have a strategy, I have the understanding of that strategy, and I know how to trade this, and if I get into a situation with my account, then I know what to do. With that being said, I'm still going to be around. Obviously, I'm going to be there to help you out. But when it comes to those split decisions, those split-second decisions, you need to know what to do. Because by the time I send a message, it can be too late for you. So that's why it's so important to start with the actual foundation, and no one does that. So this is what we're going to do, and we will build on that. Right, so, and today we'll do the basics of the foundation, right, which is the basics of trading. Now, if you don't, if you're an advanced trader, don't, skip this and say, okay, I know the basics of trading. I guarantee you that what I'm going to tell you right now is not something that you're aware of. And even if you are aware of the topics, what I say within those, altogether, you're not aware of that. And every single step, every single trade, strategy, theory that we will cover will have the basics right here, what we're going to cover now. So that's that. What we'll cover is, we'll do the understanding of market dynamics, the importance of a strategy, the platforms that we use, the management of our account, our trade, and our risk, and then what you will do outside of the call until tomorrow. So number one is understanding market dynamics. So what are market dynamics, right? Well, in the name, market dynamics, it's dynamic, how the market moves, right? How do markets behave and move like. So we have, there's many theories, but we'll just go based on the basic market theories that everything is built off of, right? So number one, what is a market? Well, a market really is, what do we see when we look at a chart, right? So we see price, right? And we see price in, split into different times. So basically we have three dimensions here. We have time and price, right? And then depending on what candle we're using, what time frame we're using, by looking at the chart, we'll get different data from that chart, right? So we get basically different perspectives, or we get different interpretations of the same price action. And what is every single price movement? Every single price movement is an adjustment of the price depending on buyers and sellers, right? When we have a candle where the price drops, it just means that at this price no one else wants to buy, so the price goes down until someone starts buying. That's basically what it is. That's on a small perspective. On a big perspective, when we zoom out, we see that we have essentially ranges. The market can either range or trend, right? There's two essential ways a market can go. It can either range around, or it can move either up or down, right? So the volatility is either up or low, basically. So we have essentially two, and this is there's much more to it, right? But what we're going to cover now and today and in those 5 days is the necessary information that we need in order to build our strategy, in order to trade the way we trade, the way we trade in our hedge fund, the way that I trade myself, the way that all my partners trade, right? And this way of trading is not the only way of trading, but it is a way of trading where it can minimize your risk, maximize the amount of profit that you make, and most of the trades that you will be in, you will be at zero risk. That's what we're going to do, and that's what that's our goal. That's our goal in the hedge fund. That's our goal in our private trades. We want to minimize the amount of time of exposure that we have in the market. We want to minimize the amount of time where we can lose our money, and we want to maximize the amount of time where we can make money. And when we do that, over a long period of time, the outcome is always positive. So, what are we looking at? We have different, and if you've been on the live calls, you have seen me do this a couple times already. We basically have either ranging markets or we have trending markets. And basically what this is, and this is at different scales, right? But essentially we either range in the box or we move to another box, right? Now these boxes are smaller and bigger that I'm drawing, but depending on how you zoom in on every single time frame, you have boxes, right? If a box is too small for one time frame, it's going to be in another time frame. And you have boxes, and in that box, the price is being traded. People or institutions that want to buy Bitcoin and want to sell Bitcoin trade in this box. And when every single person that wanted to buy and wanted to sell Bitcoin in this day at this price did what they needed to do, there's, one of the sides will exhaust, and that's where we will go. Now these, the times where, we move quickly up and down, there are no transactions here, right? So there's people here, right? There were people that were selling and buying at 28.5, but then very quickly it went up to 35, right? So that was the next fair price. And in between, the price moved very quickly, right? Which is good if you entered along here and exited at the next box, right? So basically when you're hopping boxes, right? But the amount of trades that were going on here were not that much. And that's what you can basically evaluate too by time, is how much trading has been going on at this price. Because if time drags on and we're around the same price, that's a lot of trading going on. If time goes like this and there's only one candle, then there's not been a lot of trading going on, right? So that is also very, very important. So essentially what we can trade are two things. We can either trade the boxes, because we're expecting that the price is going up and down in the box, or we're expecting a big move up or down between the boxes, right? There are essentially two things. We can either have a trend reversal strategy or a trend following strategy. Now on different time frames, this is going to look differently. If I go to the daily on Bitcoin, you will see those ranges look very different and are much larger than on smaller time frames. But the idea is the same, right? We have ranges and we go up or down. So that's our theory, right? We either have trend following or trend reversal. Now another thing that you can do is arbitrage, which is between markets. And when you see a difference between different markets or exchanges, that's your arbitrage, and those are also safe trades. And it's also a lot of trading potential, but it's not really what we're talking about right now. Okay, so far so good. Does everything make sense? I hope so. Those are the basics, right? So now the question is, how do we profit from this? How do we make money in the market consistently, where we can expect more money to come in every single month? Because that's what most of us want, right? That's what most of us want. We want to have a somehow steady income from trading, or grow the account and compound it, which comes down to the same exact situation, same exact scenario, right? So now if you've been trading then you understand the differences between trading with a strategy and without a strategy. So essentially, by understanding the core principles of a market, for example here, that we're ranging and what a ranging market is, we first of all find a strategy. Second of all, we find what we can expect in the market to do, and over a longer term we can expect to be profitable overall. And really how it looks like is that you have 99% of people in the market that lose money, and way under 1% of people that make money. So that's that, because it's a zero-sum game, right? When you make money in the market, when you just had a profitable trade, that money wasn't magically generated. That profit that you just made came from the market, came from someone else that lost the money. That's just the reality of trading. If you don't like that, then you don't have to trade. But every single market works like that. If you made profit, someone else lost, which means that you're head to head with other people and you need to outperform them. That's what you need to do. That's the bad news. The good news is that most people are driven purely emotionally and are looking at a market like a casino, which means that their behavior is predictable. It's the same every single day, every single week, every single month, and it's the same thing that they do in a casino. And because of this one fact, we can also make a behavior that is the opposite of that is also predictable. And based on that predictable behavior, we will make sure that we'll be profitable in the long term. How do we do that? Well, we basically do the exact opposite of what gamblers do. With gamblers, I mean normal traders, right? And here's the thing, every single trader, or most traders, when you talk to them about trading, they will always exaggerate the results. They will always exaggerate. It's like fishermen, right? It's when you go to a fisherman, you ask him, how was the day out in the sea? He'll be like, I caught a fish. It was this big, and really it was like a 2-centimeter sardine or something like that. But he spreads his arms. He's like, it's like this big. That was my fish today, And yesterday I had a fish that was even bigger, right? That's what he will say, and that's literally what a trader will say too, right? And they do it for multiple reasons. I mean, one of them boosting the ego, sure, but then the other, and this is, by the way, this is not people that are selling something or selling a course or something like that. This is literally just traders that are talking about their trading. So one of the reasons, yeah, sure, they're boosting their ego. The second reason, though, is that that's what they believe. That's what they truly believe. And they believe that because they kind of have to. Because if they go off of feeling and not off of stats, right? So let's just assume that they had 3 bad trades in a row, right? 3 just bad, like all around bad trades, nothing good about them, right? Every single trade, when it ended up bad and they ended up in a loss, they were like, oh damn, like this was a bit unfortunate because this indicator moved, a centimeter too much, or this wick just got me, and it's very unfortunate, but next time it's going to be better. And then they do a second trade and they'll be like, oh, I mean, this one was wrong too, but I'm kind of getting there. Like this one was a little better than the first one. So, next time's going to be better. And then they do the third trade. It's a loss again. And they'll be like, oh yeah, but I think I kind of figured it out. And then they do a fourth trade, and the fourth trade is profitable, right? And they're like, holy shit, I figured it out. It was an amazing trade, like from start to finish. It was a great trade. It was amazing. Like I am a profitable trader. I can be a pro trader. And he goes and tells all his friends about his amazing trade. And he said, that I caught a fish this big, right? In reality, this guy made a 1% profit after 3 trades where he lost 10% each. That's what happened. And if you look at the P&L, that's what happened. And he can tell you whatever he wants, he can believe whatever he wants, but that is what happened. But he thinks, in his head, he thinks that the win was so big because emotionally it was such a satisfying moment, such a euphoric moment. Like he did it, confirmation, like all of the euphoria, all of the dopamine, all of the adrenaline, testosterone, all of that, right? For him, it's a win. But when you look at the P&L, he's down like 29% of his account. And but he will tell you that he's gonna quit his job next week, and that's not his fault. It's the nature of the market. It's literally been designed to do this, right? It's literally been designed to condition you to think with emotions, which is very bad news for you if you're an emotional trader and that's all you're gonna do, and that's your life. But it's very good news if you're trying to think, outside of the box, literally, and, find a consistent way on how you can make money. Because that, let's just call him Joe right now, that the guy, Joe, who just, lost 29%, is telling all his friends about how amazing he is in trading. Like, guess what he's gonna do next week? He's gonna do the same exact thing, and the week after that he's gonna do the same exact thing. He'll do it constantly, over and over and over and over again, and when he's out of money in the account, he will just load up more money. And most people trade like that. And it's and if you think like, okay, yeah, maybe, but maybe not everyone. Everyone. And people that are thinking or trading a little bit better, or at least they think, the same thing happens, but it's not a week, it's a couple months. It's just a different time horizon, but the effect is the same, exactly the same. And you might think, okay, how how do I know this, or like how what even gets me to say that? Well, first, I was one of those people. I was the Joe, right? Who wasn't. But then eventually, I was trading, I had the emotional roller coaster, but I kept looking at my P&L. It was just going down constantly, right? So we're like, okay, well, what is it? Like, how, it seems almost impossible to find some consistency in your performance. And that was when we, already had the hedge fund, and we were working a lot. We were doing thousands of different analyses and building software. Specifically, we brought in AI, predictions, all of that. And turns out that when we actually got to it, it was much, much simpler than we thought. Just today, I was talking to Alex. We were talking about trading. Alex is my partner in the hedge fund, and we're talking about trading. And I told him that the bundles that we have in our hedge fund on the dashboards that you guys have access to. Those dashboards, they're the most consistent strategies I've ever seen in my life, and kind of probably the only ones that are like really this consistent, where I just check back in, a couple weeks later, and they're doing the exact same. And Alex, he was like, yeah, but dude, the strategies are so dumb and simple that they have to work. And I was like, exactly. And it took us 2 years to get that, right? Whatever you're gonna mention now, what if we tried it? Yes, we did. We tried everything. And it wasn't 2 years of, casually working on it. 2 years, every single day, 12 to 14 hours a day. We did not have day offs. Like, we went out, like, maybe, and out of the house. I don't mean party. Out of the house, like, maybe once a month. Like, it was insane. And that was the result. The result of it were strategies where, when you look at them, you're like, of course. I mean, obviously they work. Like, this is so simple, you know? And that's where the devil is, right? The devil is in the detail, and it's in the simplicity of it, right? So whenever someone comes to you and they tell you about the new indicator or the new, I don't know, their new AI model, all of that, it's overcomplicating, right? The market basics are simple. The psychology of people is simple. They will do the same exact thing. So you can solve that problem simply, not easily. There's a big difference. Not easily, simply, right? The steps to get there are few. To find out what the steps are, it takes a lot of time. So those learnings, for what it's worth, right? That's something that I'm trying to convey to you guys in the next 5 days. And also, as we go on, we'll build a strategy, which is one of the strategies that are in the bundle, by the way, that will be trading. And this is a strategy that some of you guys have already traded. Now I can tell you we're gonna go down a little bit. Do with it what you please. Yeah. So when you watch a recording, you can just go to this time and check if I was right. Little gamble here. So that is the theory, right? That's the theory. So how do we do that? What is the secret magic strategy that I will tell you now that will make you a millionaire overnight, right? Well, turns out that that's exactly where they get you, right? It's not the strategy. It's not the strategy that will make you money. It's the management. You can trade unprofitable strategies and still make money. And someone can trade, Joe can trade the best strategy in the world and lose money. And this is exactly where the market gets you, right? It's not about the strategy. I mean, yes, it is, but it's not the most important thing by far. The most important thing by far is for you to understand what's going on in the market and to take actions and make decisions on the go that will make sure that you make money. And then make sure that most of the time, you will have zero risk in a trade. That's exactly how you make money consistently. You take your risk off the table, but you let your potential to make money there, and you basically do the opposite of what gamblers do, and you will be rewarded for that. Now, you don't have to believe me, right? And I will tell you, we will do the live trades, and during those live trades, you will hate me, because I will tell you to do things that you don't want to do. But when you do them, honestly, it doesn't matter if you do them or not. When you do them, you'll see that I was right, and you'll make money. And if you don't do them, you'll see that I was right, and you'll do it next time. That's kind of what has been happening until now. So we have our core market theories, and there might be more, but really what we're going to focus on is we either break out of a range and go to the next one, or we're inside a range and we're ranging. That's all we need to know. That's more than you need to know. And we will build our entire strategy. We'll build our entire predictability, consistency, trading, our income on these two facts, right? Simple, not easy, but simple, right? and we will take Joe's lunch money every single day, with him still being happy that he caught the huge fish, right? But we'll buy something with his lunch money. And this is just the reality of what it is. Like, yes, like I could have a bigger filter right now, but hey, I mean, who am I kidding? That's just, I'm just gonna say it out loud right away, and then we can move on. So yeah, the importance of the difference maker between if you make money or lose money in the market is your management. And the management, with management I mean profit management, risk management, trade management. What trades do you trade? What strategy do you trade? Why do you trade that strategy? When do you trade that strategy? How do you enter? When do you enter? Do you enter? Can you afford this trade? When you're in the trade, what are your take profits? What's your stop loss? Why is it there? Right? You don't. There's no action that you will take in a market where you don't know why. And every single action that you do take in a market, I will ask you why, and I will expect an exact argument why you do that. And that argument needs to work with the overall theory, and if it doesn't, then what you do in the market is not right. And with not right, I'm not saying there's one way to do it. I'm saying that's my way to do it that has been proven to work. So this is a great example. So here's what we do. We will not, go into the strategies just yet. Not today. In fact, I will just delete these for now, and we will just look at the hourly on Bitcoin at this time of recording. And we have two trades here that we've been trading with the Discord. And a little background, what it was that I was short at this level for a big short all the way down on a higher time frame. And then we switched back to a long, and we ended up profitable on both trades, which is, another situation where, we did not stay in a trade, we flipped. And that is something, I was going to say right now, that it's important to be able to change your opinion as a trader, change your bias, right? But you shouldn't have a bias, right? Your bias is your strategy. Whether you're up, down, long, short, it does not matter. And you will understand that by the end of this week. So let's just assume, and now I will explain to you why management is so important with these two boxes. So let's just assume that you have a little bit of, what a range is, right? For range trading, for some reason, some magical indicator, some magical AI Lord of the Rings indicator. It's funny because I have I've seen on Instagram the other day, someone created a trading bot and he called him like Nazgul or something like that from Lord of the Rings. It was kind of funny because he was like pushing it a lot. So that's how, let's just say that Nazgul told you to short here, right? It's a trend reversal. We're at the top of the range. We're shorting, right? So let's just assume that you had a signal here from a bot on a 1 hour time frame. You were somewhere, college, work, wherever, and you entered a couple candles later. We entered here, right? So what do we do here, right? Well, what did the bot do at first? What the bot did was it entered here. Let's say it's a very unrealistic bot that does not take real life into account, and it enters here, and it puts a stop loss right here, and it puts a take profit right here, which it in theory would have even hit, right? With a 5.3 risk to reward, and that's the trade, right? So this is a strategy, and as we can see, it's a great strategy, right? And this is what I meant at the beginning, where if I just give you the signals, you will always have a worse performance than me, and there's a very high likelihood that you will break the trades, that they will not work for you either way. And when someone gives out signals, 90% of the people trading those signals are still losing money, even if the signals are good, because they don't understand any theory behind the signals or the market or trade management. So they will always mismanage the trade, and that is exactly where retail traders and Joe lose their money, and a very, very small portion in the market make the money, because it's a zero-sum game, right? All of the money transactions added together is a zero, right? If someone makes $1, someone has to lose $1, and vice versa. If you lose $1 because you did something stupid, some lucky guy will get $1, right? So this is what the bot did, right? But you were not able to enter right here, because the bot, probably gave you the signal after this 5-minute candle anyways, or 1-hour candle or whatever, and you entered later. So what do you do? Well, the stop loss that the bot gave you, hopefully, does not change, right? So it has to be at the same price. The take profit does not change, so it has to be at the same price. The only thing that changed was your entry. Now you went from a 5 point something risk to reward, right? Let's just say 5.5 risk to reward. You went into a, I don't know where we were, 1.3 risk to reward. Now this might not look like a big deal, because this is a good trade anyway, so I'm just going to enter later, and all of that. But yes, it is a big deal, because the rules, the boundaries that you have set for your trade are not the same like here, and I will explain to you why now. Here, so the bot, right, is risking 0.8% in order to make 4.8%, right? You are risking 2.4% in order to make 3.2%. So risking much more, right? You're risking much more in order to get less than the bot did. So, entering later, it's a big deal. It is a big deal because it's a completely different trade. And you might think, okay, well, how is it a completely different trade? I mean, the price just moves the same. Everyone's looking at the same chart. Yeah, everyone's looking at the same chart, but they don't have the same cards. They don't have the same cards, because when you enter here, as the bot did, and you risk 0.8 or 0.7%, then, and you enter on this wick, right? Well, as you can see, the price never visited that level again, which means that whoever entered here, which, as realistic as or unrealistic as it might be, let's just assume that someone entered here, and I will show you how that actually is realistic. But if someone entered here, they were in a loss in this trade for 0 seconds. 0 seconds. They were instantly in profit, and they were in profit the entire time. So their risk was 0. The realized risk on the trade was 0. When you enter here, right, so let's just say here, you're instantly in a loss. And mind you, you're not risking 0.7%, you're risking 2.45%. So, and in order to make less money, by the way. So even if this trade ended up the right way, you made less money than this person, and you risked much more than this person that entered here. And on top of that, this is one trade, and this trade ended up being correct, right? But what do we do, with 10 trades like these? What's the hit rate, right? Well, let's just assume that the hit rate is, 50%, right? Just for simplicity's sake. If the hit rate is 50% and someone trades like this with a risk to reward ratio of, say, for simplicity, 6-1. So for every percent that they risk, they get 6% back if they win. Then they'll be very, very profitable. In fact, they only need to win one trade out of 6 trades in order to be break even. They only need to win one trade. They can mess up 5 trades, and then with one trade, they make everything back in their break even because of their setup, because of their management. You on the other, and by the way, they were in a loss 0% of the time here, right? And this is, by the way, this is a fictional trade, but we will get into more realistic scenarios later. But it's just important that you understand the theory, right? We're talking about extreme examples, right? Now, number 2 is Hans. By the way, I saw you. I will just finish this thought, and I'll add you afterwards, so I don't lose my train of thought. Number 2 is when you enter here, right? And you have a 1-to-1 risk to reward, right? Assuming that your hit rate is 50%, then you just about barely make it. If you had 5 losses in a row, and then 1 win, like this guy had, he'd be break even. You would be out of the trading game. You would have lost so many times. And because the setup that you have, the boundaries that you have set for the trade are completely different. This and this is a completely different trade. It might as well have been a completely different market. It might have been completely different coin market universe. It's something completely else. And if you do this, over the span of 100 trades or 1,000 trades, the difference in performance is uncomparable. So how do we make sure that, we are in a situation like this rather than in a situation like this, right? And this is, by the way, still good. Like, we have situations, like I've seen traders do something like this. I mean, hell, I've seen traders do something like this, but like, still a realistic example. So how do we make sure that our management, right, not our strategy, not the market, right? Our strategy is work that we do beforehand, and that's that. And the market is the market, right? At the moment of trading, we don't have any control over the rules in the strategy that we have set, right? And we don't have any control over the market. The only thing that we can control in the time of trading is how we manage the trade, right? The strategy, told us when to enter, told us where to put our take profits and stop losses, and that's it. And we cannot change it just because we feel like it, right? We cannot force our idea onto the market just because we feel like, because it's not fair, because we entered later, right? It's literally how you lose money, right? So that's the idea. So how do we make sure that we are, every single trade that we enter, we are on the upside, right? We are setting ourselves up for success rather than setting ourselves up for failure, right? Well, it's a couple things. It's, first of all, understanding the theory of your strategy, and if you do, you can somehow predict or assume, when your strategy is going to trigger, and that will give you much better entries. And then number two is understanding what risk management and trade management is, and based on that, be in a situation always where you will, end up having profits. By the way, this trade, you can still manage it very well, right? Very well, and not even, looking at our strategy. Like entering here in our trade, we would if we would live trade it in the Discord, we would manage it very well. What we would do is we would look at the indicators, we would look at the stochastics, and then see that there's a push up, so we wouldn't enter that much here. We would layer our entries, and then by the time we start going down and we cross our break even, which would be higher now, by the way, because we DCA'd up, by the time we broke our break even and went over the range here, we'd put our stop loss to break even and have zero risk in this trade. That was a little spoiler alert on how we would trade, right? But this is what we would do. Right, so how do you make sure that you are in a position where you trade with the smallest risk possible? Well, first of all, you need to understand your strategy. Assuming here we are range trading, right? What does that mean? We assume, right? We might be right, we might be wrong, but what we assume is that the market or the price is in a range. So it will go down, it will turn down at the top of the range, and it will turn up at the bottom of the range. That's our theory, right? We might be right, we might be wrong. But in general, this is something, and I think we can all agree on that, this is something that happens somehow frequently in the market, right? So, in theory, it might make sense to trade that or to bet on it that that's going to happen. And it is a good idea in theory, you just need to manage it right? So how do we make sure that this is the case? Well, first of all, when we enter, we need to, set our risk and our profit the right way. And here's the thing. We don't say how much we want to trade with or how much we want to make. And then based on that, we build our trade. No, we look at what the market is giving us. We look at the current situation in the market, and then we determine how much we can afford to trade this with. And with how much we can afford, I mean how much of our portfolio we can allocate, how much leverage we can use, all of that, right? And this thought or this step in a trade setup is something that is missing with a lot of people, and this happens many times. People ask me, is this a good trade? And they just give me an entry point, and I'm like, okay, well, what's your theory behind the trade, right? What I'm expecting, or what I'm hoping them to say is, I'm trading a trend reversal strategy. I have an invalidation at the break point of the range. I have my DP levels here. I will stop risking at this point, and right now the situation looks like I will go to that zero risk point very with a high likelihood, and even if I don't, then I lose a fraction of what I am about to gain, or that I can possibly gain. If someone tells me that, I don't even need to know the market or the current situation of the market. It doesn't matter. When someone tells me that, I'm like, good trade. It's a good trade because it's all about the management, right? If that trade, if it's a 10-to-1 risk to reward, right? And then I don't have to know what your setup is, as long as it's not a random number that you pull with the 10-to-1, but it's within a range. Then that's all I need to know, and I know that you're fine, because you do these trades, you do 10 of these trades, and you're good. You're definitely profitable. So that's the thing. Okay, number one is what is our theory, right? We're range trading. where do we put our stop loss? Well, we put our stop loss not where we want it to be, not where we feel like it. We put our stop loss at the point where our theory is invalidated, right? What is our theory? We're range trading. So when is our theory invalidated? Our theory is invalidated when the price is not in the range anymore, right? So now we need to assume, and all of those are assumptions, they're probabilities. They're not an exact number of this is going to happen, this is not going to happen, but it is a range where, it's most likely to happen. And with the most likely to happen, together with our correct management, will over a long period of time be profitable, for sure. To a high degree of probability, right? This comes down to quantum mechanics, with the experiment where they were, shooting light particles through holes, and when you were looking at that, you got, it behaved like light rays, but when you didn't look at that, it behaved like waves of probability. It's the same exact thing, right? This might be a bit far-fetched, but essentially, we don't know where the price is going to go exactly to the exact number until it's there. And there's no way of predicting it, but we can predict a range where there's a 80% chance that it's going to be there. And that 80% is good for us if everything's 80% and we're right 90% of the time that 80% is going to happen. And when we're right, we gain 10 times the amount of what we lose. So you do the math, but together it's going to be profitable, right? Right. So that's that. So where do we put our stop loss? We put our stop loss where our theory is invalidated. At this point, without looking further back, it's around this level because we just bounced here, right? So if we go above that high, then it's more likely that we'll go up, right? There can be a scam wick, but let's just say, for simplicity. We're not talking about strategies right now. We're talking about the core mechanics of a market. So that's our invalidation. Now, where's our profit? Well, what's our theory? We're trading range trading. We're trading a range. So, it's going to be the bottom of the range. So we just put it at the bottom of the range. So this is our trade. Now, from the entry, where the price is right now, where the price is going to go, we, can win around 4% and we can lose about 1.37% with a 2.8 risk to reward ratio. Okay. So we have that. Now, how often are we right in our strategy? Well, that's a number that you need to figure out by backtesting it. I'm just going to tell you, in this situation, in our strategy, assuming we're trading our strategy, it's around 86-87%. And with a 2.86 risk to reward. So right away, it's looking good, right? Because we're profitable. But Joe can still mess it up, and he will. So this is how much we risk, right? 1.37%. Now, how much can I use of my account in this trade? How much can I afford to trade with? Well, this also depends on, what you're trading for, who you are, how much you trade with, right? If you're a hedge fund, then you're going to trade, much less than if you, are a new trader that's trading with $1,000 and needs to build their account, right? I mean, you have much less to lose than a hedge fund, If you lose $1,000, you lose $1,000. If a hedge fund loses a couple $1 million, someone's going to jail. So, well, not really, but So that's that, right? But let's just assume you're trading with $1,000 or $10,000. How much can you trade? Well, a relatively still aggressive but solid way of looking at it is that in any trade, the maximum that you can lose is 10%, right? And this is only This is only assuming that you have a 80 to 90% win rate. Only then you can do that. But let's assume you do, and let's assume that the maximum you can lose in a trade, you allow yourself to lose in a trade, is 10%. So how much can you trade this with, right? How much can you trade this with, this trade with? By the way, I'm not looking at the profit. I'm only looking at the risk that I set up from the time that I entered to my invalidation level. This does my price where I entered does not change because I entered, and my invalidation zone does not change because it doesn't care about me or my trade. It's just a level. So how much can I trade this with? Well, I can put up my leverage to the point where that 1.3% becomes 10%, right? So in this situation, it's around what, like 8x maybe. For simplicity, if this was 1%, then what you can use leverage wise is 10x, because 1% times 10 is 10%, and that's the maximum of your account that you can lose, right? Now we are a little bit higher here, so we need to use our leverage a bit less, so yeah. So so around like what, 8x or something like that. By the way, I still did not look at the profits. I just looked at the risk that I can trade this with. Now with an 8x, let's assume that we're using 8x for this. Now that 4%, I can also multiply times 8, and that's how much I'm gonna make. So by risking 10%, I can make, like 30-40%, right? So because of that, I'm still, pretty good with my trades. I can get a lot of, I can literally build up my account to 10x within, a little compounding in my head, like within a week, right? So it's crazy, right? And people don't understand that. And you can build your account very, very quickly while still having the correct risk management, right? But what the main thing that you're looking at is finding trades where you are set up for success, where you're so much better off than other people in this trade, where the chance of you losing is so low. Because someone enters in the middle of the range, it's a coin flip if they lose money or not. Whereas here, it's much harder to lose money than to win money, right? So what you do here, so that's number one, right? We had our theory, we set up our trade, we set up our risk. Because of that risk, we saw how much we can afford to trade with, and that resulted in how much we can win. Now, how do we, manage the trade as it goes on? Well, this is our best case scenario, right? Well, this is our expected scenario, right? So what I like to do is I like to add 2 more take profit levels. I like to add a best case scenario, right? So we assume that we will go to the bottom of the range because that's our theory, that's our strategy, right? But, what if we're lucky? Well, if we're lucky, we still want to have, some horses in a race and, have a take profit somewhere lower. It can happen. It can happen, right? And we can afford to do this because of what we do later on. So that's that's the one extra thing that we add in. And the second extra thing that we add in is our safe case, right? So that's our safe case. And that is something where the probability is very, very high. Like, we're assuming that we're trading the range. We're at the top of the range, we enter, we're shorting. So, it's more than likely that it's going to touch the bottom of the range. Easy enough, right? Yeah. But, what's even more likely than the price touching the bottom of the range? Well, even more likely is that the price is going to touch at least the middle of the range, right? And now we can afford to put a TP here, a take profit level here, because our entry is so good. If someone enters at the middle of the range, they can't really put a take profit here. So by the time the price moves to the bottom of the range, middle of the range, we have already taken profit and we have put our stop loss to break even, so we have zero risk in this trade. Whereas if someone entered in the middle of the range, they're fully exposed to their risk, have very little upside, and we already took profits home, and we have zero risk in this trade. So we took profits home, and whatever happens in this trade, we're not gonna lose money, guaranteed. That's the situation that we're in because of our setup and our management. That's the situation we're in. Like, if someone told you, hey, you can, with the click of a button or like 2 buttons, you can just get a bunch of cash and you are not risking any cash. That's the offer that's on the table when you enter right? That's the offer on the table when you enter right. Whereas here it's like, yeah, it's kind of 50-50 if you lose or win. It's a completely different universe. It's not even the same market that those two people are trading, and that's the importance of the right setup and the right management. Right? So yeah, that's it. And then we had our second trade too, which this is a great example. And this is not a theoretical trade anymore. This is a trade that a member, Seth, he's watching right now, a member in the Discord has set up. Not me, but a member that has been, on 3 live calls, has set up this trade. And he did get an entry like this. Or, well, I traded his trade and I got an entry like this. He got drunk on a weekend and he didn't trade. But nevertheless, and I did get an entry here. Now someone might think, okay, how can you get an entry there? Like, it's just a wick. Well, we know our theory, right? Our theory is that we're range trading, right? Together with our indicators that we will not cover yet. We can assume that, when we touch this level, that we will turn back, right? So what did I do? I put an order here. Before all of this happened, I was in a short. I was in a short here with possibility to go even lower. Like that's what I was expecting, was on a 4-hour time frame. I was expecting a big short. But I know my other strategy, and my other strategy is range trading. So I'm just going to put that in too. And I put an order there, and what happened is it got picked up, the wick happened, and my entry was amazing because I understood the core market principle and understood the strategy that I'm trading. So I put my strategy there, I put my entry there, it got picked up, and there was, again, 0% of the trade I was in a loss. I was always profitable. By the time the trade went back to the middle of the range, I took some profits, I clicked a button and I generated cash for myself, and I put my stop loss to break even. So the profit, I will not, whatever happens in this trade, I will end up profitable because I already took profits and I put my risk to 0. If the price just drops right now and goes to hell, I don't care because I'm profitable. And where someone, Joe, might be like, oh, amazing, I got a great trade, this is gonna go to 50,000 now, new all-time highs, let's go 100,000, and I'm just gonna hold it all the way, and then I'm gonna be a millionaire and I'm gonna buy a yacht, right? I mean, good for Joe, like, it's a great story, but like, he just lost like 5 trades in a row. I made profit here with 0% risk. I don't care what Joe does. Like, I just made money here with 0 risk. Like that's it. That's it, right? That's all you need. If someone asks you, how do you make money in the market? Well, you set yourself up. So you take money out and you have as little risk as possible. I mean, that's kind of self-explanatory, right? It should be, but people don't really realize it somehow, because money is involved. And because money is involved, fantasies are involved, and it just cycles out of control mentally, and people don't think rationally. But this is the rational thing to do, and you do this every time you see a range. And this doesn't have to happen a lot. It does, but it doesn't have to happen. Every time you see a range, you just do that trade. You set yourself up correctly. You minimize your risk. You take profits off the table, and that's all you do. That's all, right? That's all you do to it. So, and that is trade management. And someone can trade this exact same range and blow their entire account and lose everything. And someone can trade this and be exposed to the market for 0 seconds and have 2 profitable trades. And the only difference was the understanding of the market and the trade management and risk management within it. It's the same market. It's the same price action. It's the same levels. It's the same conditions. All of that is the same. The only difference was the understanding of what's going on, or what it actually is that we're trading. And that is the importance of that, and is something that we will cover over the next 5 days, where at the end of those 5 days, you will know exactly how to do exactly this. And if this is something that you take home, then we're won. And I will deem the 5 days as a success. Right? So that's basically that. We will be mostly looking at crypto for simplicity's sake, but this applies to literally any single, this applies to the housing market for all I care. It doesn't really matter. Wherever someone buys and someone sells, it's the same idea. It's the same market principles. It's the same theory and background. Right? So this was just a little sneak peek into what we'll do, but we'll start with our trading theory, go over the strategies, go over in detailed risk management, in detail our profit management, and then build up a strategy with statistics to see okay, this is my strategy, this is my vehicle, right? This is how much fuel I can put in, and this is how much I can expect out. And when you are okay with this is how much I can expect out, and that number aligns with what you want, then you will be able to trade this with the correct mindset and the correct emotional state, because you know that you're on the path, exactly the planned out path of what you're supposed to do in order to get to where you want, right? You basically align reality with what you want, and once you do that, you'll be able to trade it consistently without feeling like you're not doing enough, or you're not making enough money, or that you'll never get rich at this rate, stuff like that, right? So that's our goal that we're trying to achieve. All right, so I'm about to throw in Hans real quick. Let me just so this is what we covered. This is this recorded, right? Now there's one more aspect to this, right, which is the mindset aspect and the accountability aspect. So today in the Discord I added 3 more channels or 4 more channels, and this is your homework of what you need to do before the next trade, which is in the goals channel. You need to say what your current status with trading, and I know that some of you already introduced themselves and so on and so forth, I know, but just write it down in that channel. Write down what your current state is with trading and where you want to get. That's step number 1, right? Because then we see your current situation, your realistic situation, which is, how much you know about trading, how many trades you've done, how much you trade with, all of that, right? That's your current situation. And then where you want to get, right? Do you want to own a hedge fund and be a multimillionaire? Do you want to make an extra $1,000 a month? Whatever it is, no wrong answers, whatever it is, right? And when we have your current state and your goal, then we will be able to fit you with the right strategy and vehicle in order to get there. And we'll build it out, we'll plan it out, and then you will have an exact strategy and an exact plan in every single trade that you do. And because of that, you will be much less likely to do stupid shit, right? And if you do, then I'll be around to smack you. So that's homework number 1. Write down your current state and your goal, and then every single day we will write out the goals for the day for trading, which will align with our overall goal. You see where I'm getting there. And then we'll go through every single trade and we analyze it. And we do all those things, and we'll do those every single day. And I guarantee you, the way you're looking at trading, thinking about trading, and trading yourself is gonna transform by orders of magnitude. It will not, you will not be the same person trading, and you will be able to be consistently profitable. So yeah, that is my promise, that as long as you do for these 5 days, as long as you do what I tell you to do, then that will be the outcome. That is my promise. And we will fit you with, depending on what your goal is, we will fit you with the right strategy and the right risk management in order to do that, right? One by one, individually. All right, so that is all the points that I wanted to cover. I know that Hans wanted to join in and say something, so let me just add you in real quick. What's up, my dude?
What's up, bro? How you doing?
Good, how are you?
I'm good, man. Out here working 2 jobs.
Okay.
Dad life and work life. But no, but I was just listening to what you were saying before, and with the risk to reward, and I just want to say, risk to reward, and win rate is it's like a formula, So it's just
Exactly.
I know this one guy who he risks more, but he always wins, dude. He usually wins, but when he loses big. He's winning let's say 7,000, 4,000, 5,000.
Yeah.
And then sometimes his trades run to the TP and he'll make 28,000. But usually he's closing at 20 pips, 10 pips, 15 pips.
Yeah.
You know what I'm saying? Not letting it run too much.
Exactly.
And he just secures it. But his RR is negative. It's negative RR. But he proves over and over again that he can be profitable overall, even if his RR is negative. So
exactly. It's literally a dance between the two, right? So the strategy is the vehicle you're in, right? So that's your win rate, right? If you have a high win rate, you can risk more, and it's literally a simple equation. And if you I will literally tomorrow I'll draw it up, and then if if your win rate is 10%, so 1 out of 10 times you only win, well then you need to make up for all those losses with at least 10 times the profit. But if you win 99% of the times, then you can risk a shit ton, because most of the time you're gonna win, and the one time you lose, you can lose big because you win so often.
Right.
Exactly.
Yeah, so yeah, I just thought that this lesson here was a very good one, and it's just like for people who are new to trading, it's just gonna come with experience and experiment. You know, like experiment with your RR. You know what I'm saying? Like right now, I'm using 1-to-1 RR, but the win rate is like 70%, so 76% around there. So
You good.
you know what I'm saying? Yeah.
You good. And then exactly, and then you need to stay static with what you do, right? Because when you start doing other stuff, then your win rate and your RR, they're not representative anymore, right? But if you are like, it's not, there's no right or wrong win rate and no right or wrong risk to reward. It's just that those numbers together, when you add them together, they need to be positive.
Yeah, and it also depends as to what trading style you're doing. So everything kind of goes hand in hand. Because if you're scalping, you could have like crazy RR, like 1-to-10, you know, something like that, or 1-to-1, like if you want to just go in and out, like. So it really just depends on what style you're doing. So like if you're doing like your swing trading, you know what I'm saying? Maybe you have like a 1-to-1 or a 1-to-2.
Yeah.
You know, something like that. But like usually you'll see bigger RRs when it comes to scalping, or just like, or it even can go from like a simple trade to you letting the trade run, and it just gives you a 10R, and you didn't intend to it, but the way you managed it, and then that connects to what you were saying about managing. And if you manage the trade properly, you can let it run, and you can get those 10 RRs. You know, so
exactly.
It all connects. It all goes together.
It's about it's about doing this work, like this work on paper beforehand, and then once you jump into the trade, you know exactly what you do already, and you're not surprised by it, and you know how much you can afford to risk, you know how much you can afford to win, right? Because you've done the planning beforehand.
Yeah, exactly. The planning is key, man. You can't just jump into trading without knowing the plan. You know, like I remember trading the bull run, and I didn't have a plan, man. I was just longing and shorting fucking Ethereum. Well, more longing because I wasn't good at shorting. I guess scared of shorting. I don't know. It's like a weird psychology, but once you understand trading, shorting, longing, it's the same thing. It don't matter. It's not gonna matter.
Yeah.
But I had no plan at that time, man, and it was just like I would make $8,000, but then I would lose $8,000. Just like what the fuck, you know? Like it was crazy up and down. Like there was no consistency. Then I started learning about exactly what we're talking about, the plan, and it started to come together slowly, and you know, with time. You know what I'm saying? But like being in a group like this, where it's like essentially laid down for you step by step, is a much faster way and more optimized way to achieve profitability. Like I had to learn everything by trial and error, losing money. You know what I'm saying? Like, yeah, you're gonna lose money, but you probably lose less if you listen to Phil and listen to Alex and stuff. But listen to me. I've been through it. I've been burnt.
Yeah, exactly.
But
the point, like,
but
the point is the understanding of it, and then the ability to plan it, and then you're so much better off. It's not even comparable.
Yeah, dude.
Yeah. All right, man.
But,
thanks.
Good stuff for sure, man. Appreciate everything that you're showing us here, Phil.
Yeah, for
I'm always
sure.
a student. You know, just remember that we are all eternal students, man. We're all learning.
Absolutely.
So,
absolutely.
That's it, man. Thank you, sir.
Yeah, thank you. Thanks for jumping in, man. Appreciate it.
No doubt, man.
Appreciate it. I love it because then you're, like, it's a big help when someone comes in and like reiterates, you know, in a way that like I wanted to say it, but like it was on my tongue, and then you just come in and you say it. I'm like, perfect.
Is Han gonna come in and translate?
Yeah.
That's so funny. But all right, yo. That was all for me. I'll see you guys in the chat rooms.
All right, man. Appreciate you.
See you guys.
All right, see ya. Bye-bye.